Let's get started. Number 8, the employer match multiplier. You're staring at your paycheck, wondering where all the money went, while actively ignoring the 401k enrolling email from HR. This isn't just you being lazy, it's your brain preferring immediate cash over future security. But you are literally leaving free money on the table. When an employer offers a 401k match, it's a 100% guaranteed return on your investment the second you deposit it. Even the greatest hedge fund managers in the world can't guarantee a 100% return. It feels like a glitch because nobody just hands you money for saving your own money. But this is legally binding corporate policy. Take the free money. Number 7, the plastic profit loop, credit card churning. You see someone whip out a metal credit card to buy a $4 coffee and assume they're drowning in debt. Sometimes they are. But if they're playing the game right, they're using the system's own momentum against it. Banks will literally throw hundreds of dollars or free flights to Hawaii at you just for signing up and putting your normal rent and grocery spending on their card. It feels like a scam because you're extracting value from a massive financial institution. Your brain assumes there must be a catch. The catch is that banks assume you'll mess up and pay 25% interest. If you just pay the balance in full every month, you are legally siphoning travel points and cash back out of a multi-billion-dollar marketing budget. Number 6, the lazy money migration, high-yield savings accounts. You've kept your savings in the same brick-and-mortar bank since you were 16. It earns 0.01% interest, meaning your $10,000 makes you enough money to buy exactly one sad cheeseburger a year. You leave it there because moving it feels like a hassle. Meanwhile, high-yield savings accounts, HYSAs, are paying 4% or 5%. It is the exact same risk level, FDIC insured, perfectly safe. But your money literally multiplies 400 times faster just because you spent 10 minutes changing routing numbers online. It feels like an exploit because doing absolutely zero physical work shouldn't result in an extra $500 a year, but it does. Number 5, the rent-free reality hack, house hacking. You look at housing prices and feel your soul leave your body. You assume you'll be paying a landlord until the sun burns out. But then there's house hacking. You buy a duplex or a house with a basement apartment, live in one unit, and rent out the other. Suddenly, a stranger is legally obligated to pay your mortgage for you. It feels like a glitch because the biggest expense of your entire life, shelter, is being subsidized by someone else. You build equity, the property appreciates, and your living expenses drop to near zero, all because you decided to share a wall with a tenant. Number 4, the healthcare cheat code, the HSA. You look at your health insurance paperwork and want to cry, but if you have a high-deductible health plan, you get access to a health savings account, HSA, which is the most overpowered tax shelter in the U.S. tax code. It's the only account with a triple tax advantage. Money goes in tax-free, grows tax-free, and comes out tax-free if used for medical expenses. But the glitch is that once you hit age 65, it practically turns into a traditional retirement account, and you can withdraw it for anything. Your brain thinks it's just for buying Band-Aids and paying copays, but wealthy people use it as a secret, impenetrable vault to hide money from Uncle Sam. Number 3, the silver lining write-off, tax loss harvesting. You buy a stock, it tanks, and you feel like an absolute failure. Your survival brain hates losing resources, but the wealthy don't get mad. They get even with the IRS. It's called tax loss harvesting. You sell the losing stock, immediately lock in the loss to reduce your taxable income for the year, and then use that money to buy a similar but not identical investment. You turn your financial failure into a legal tax deduction. It feels like a glitch because you are literally getting a tax discount as a reward for making a bad investment. Number 2, the infinite snowball, dividend drips. You buy shares in a solid, boring company, they pay you a dividend, a small slice of their profit, just for owning the stock. Nice, right? But the glitch unlocks when you turn on the DRIP, dividend reinvestment plan. Instead of taking the cash, you tell the brokerage to automatically use that dividend to buy more shares of the stock. Next quarter, those new shares pay you more dividends, which buy more shares. It is a self-feeding infinite loop. You never put another dime of your own money in, but your ownership in the company grows every single quarter. It's the closest thing to a perpetual motion machine that exists in finance. Number 1, the tax-free time machine, the Roth IRA. You put your hard-earned, already taxed money into an account, buy some index funds, and forget about it for 30 years. That money compounds, doubles, and doubles again until it turns into a massive multi-million-dollar fortune.
When you finally go to withdraw it in retirement, the IRS comes knocking for their cut, and you legally get to slam the door in their face. Every single penny of growth is entirely tax-free. It feels illegal because the government always takes a cut of your earnings, but with a Roth IRA, you pay the toll on the seed, not the harvest. It is the ultimate legal middle finger to future taxes.